Coming up today, stocks hit another new record. Wall Street gets bullish again. Are we on the cusp of a mega melter? Bill Ackman tries to become a tennis player. Ethereum just hit 3,000 a coin. Airline stocks soar higher. Chris Waller wants a rate cut this month. And a little known but very important asset that's also ripping higher today. It's all happening here, folks. Let's go. $62.80 on the S&P 500 index. That's a brand new all-time high as we continue to drift higher. Yet another day on low volatility here. And apart from telecoms and a few software stocks, it was mostly bullish across the board as sentiment appears to finally be making a comeback. The latest AAII survey showing the bulls out in front for the second week in a row here. And I mean, why shouldn't they be? Look at this chart. We are just grinding and grinding higher on the S&P 500. Whilst the index is in a short-term overbought mode, and that can be a very bullish signal for forward returns when we get that persistently overbought price action in the short term. And stick with me today because I've got some interesting stuff for you. We've got Ethereum just hitting $3,000 a coin for the first time in a while as I speak. You guys remember a few days ago when it was just above 2,500, I said we're on a cusp of a breakout and it's unfolded with quite the velocity right away. Up 20% in just the last 3 days. I'll dive into that later, along with a group of small stocks that are ripping hard today on the back of some key news. Not many people are talking about this, but that's definitely a sector you want to pay attention to. So we'll get into that later on as well, along with all the latest macro charts and what other stocks are moving out there today. But first, let me just give you a feel for the overall setup of the stock market here. As this V-shaped recovery continues to persist and break out to new all-time highs. And even though we're getting a little stretched here in the short term, this chart's a day old. We've actually gone 53 days above the 20-day moving average on the S&P. Typically don't see too many more than that before we get a little bit of a pullback, and the market is just uber complacent here. In fact, 3-month realized volatility has seen its biggest drop in over 30 years. You have to go back to after 1987 when we had a similar crush in realized volatility. And we can see that in the VIX. It's actually been the largest VIX crash in history for this period of time, going from 60 just a little over 3 months ago down to 15.7 here today. And so how markets change, can we all remember just how full of fear the market and a lot of people were back here? Even Wall Street pretty much convinced we were already in or on the cusp of a recession, which once again hasn't appeared to unfold. But there's still plenty of room for many stocks to catch up, even though we've got the indices at all-time highs. That's because of mega cap tech, the likes of Nvidia, Microsoft, Meta, all sitting at highs, helping to pull the main indices up there as well. But we've still only got a little over half of all stocks above their 200-day moving averages. Many still well off their highs, which means there is room to move higher, and we could be going into a similar price action analog to that of the mid-late 90s. Whether it's a bubble or not is still yet to be seen. But unlike the late 90s, in which we saw really hot popular stocks like pets.com, they were actually unprofitable, trading for crazy valuations. This time, big tech is an absolute cash machine, with some of the companies actually trading on reasonable valuation, offering similar or high yields to risk-free, short-dated bonds. And those yields are growing at double digits. And that's what many investors are trying to wrap their head around. We've had such great price performance this last few years, and even zooming out back to March 2009 when the secular bull market kicked off. How could they possibly still be cheap? Well, that's thanks to AI. I think it's driving the greatest expansion in corporate earnings that we've ever seen, and potentially in history. And once again, Wall Street's chasing peaks of the tariff fears back in early April. They all downgraded their year-end targets on the S&P 500. Now they're all catching back up, and we're even getting calls for 7,000 by year-end, which is definitely not out of reach, considering it's only 12% higher than where we are now. And we're just on the cusp of hearing Q2 earnings, and I think once again, they'll largely surprise on the upside, as this market continually proves how resilient it really is. We even got a post today from the official White House social media account on X, showing a candlestick chart with what they refer to as a panicking, Trump's term for stupid and weak people, being upset at the stock market ripping. And I'd say a big part of this has to do with the big beautiful bill having passed. US government, the biggest spender in the world, keeping the foot on the gas, is a huge structural tailwind for corporate profits, small and large, as it's locked in lower tax rates and also delivers other perks like allowing upfront expensing of research and development costs, benefiting some of the largest tech companies out there. And I think this is what's got the market excited, because it clearly doesn't care about what's going on with trade deals anymore. That's old news. And in addition to the government, retail investors got their foot on the gas like never before either. JP Morgan thinks retail investors will lead a $500 billion buying spree. They could send stocks soaring through year end. We're even seeing some measures of increased volume and activity compared to the melt up we saw in 2020 and 2021, which just like back then we saw so-called low quality stocks absolutely ripping, just like they have done in the second quarter this year, related to crypto, quantum, meme stocks, AI, and just like back in 2021, non-profitable stocks that have a great story with a potentially huge TAM, total addressable market. And so there was plenty of momentum out in these small growth names. Not to mention the huge growth in options trading and leveraged ETFs. And I think this is a structural, secular change. Of course, we'll have smaller cycles within that secular trend, but just like options volumes, they're not going back to 2010 levels. They're not even going back to 2020 levels. We'll see a few ups and downs, but I think the overall trend is up and to the right. And that's largely due to the market being a lot more accessible to practically everybody around the world with a smartphone. And so I know people see this chart and think, oh, it's a bubble. It has to come crashing down because it's so high compared to the past. But that's what's known as gambler's fallacy. And to give you a quick example of what gambler's fallacy is, using the roulette wheel as an example, you may see a red number come up 10 times in a row. And most people will think you're more likely to see black come up next, when in fact the odds are still 50-50 as the roulette wheel has no memory. And if anything, you're more likely to see another red, as the wheel or the dealer may have a slight inconsistency that makes it more likely to see a red again. So you're better off betting on red to come up again. But of course, most people's natural instinct when you see a chart like this is that it must come crashing down. And so I think it's actually gambler's fallacy that's keeping a lot of investors sidelined here, watching in pain as the market goes up day after day after day, as they're essentially gambling their wealth on timing the entire market, which is practically impossible to do, with very few people having done it successfully in the long term. That's why, in my opinion, it pays to always be invested just to be diversified. You don't have to have your whole wealth in US high-growth tech stocks. And in addition to Wall Street and retail investors, also got one of the most prominent hedge fund managers, Bill Ackman, also bullish, commenting on a post showing there's 7.4 trillion sitting in money market funds, a new all-time high, often referred to as dry powder on the sidelines, which, if and when rates do get lowered, good chance we'll see it this year, all that money's going to be earning less yield. It may go looking in the stock market to replace that, especially boomers who've come to rely on an easy 5% yield from money market funds, as they still have the vast majority of wealth in society, even though millennials now make up the majority of the workforce. Not looking so bullish is Bill Ackman's pro tennis career, who recently just entered an ATP tournament. Going into it, he was quite confident, saying, "I'm playing the best tennis of my life, and Jack is one of the greatest doubles players ever. If we win, I'm pretty sure I will be the oldest person in tennis history to win ATP points." However, he got absolutely smoked in 67 minutes, and former US Open winner Andy Roddick slamming Bill as being a joke. However, what's no joke is the rip in Ethereum today, up over 7% from yesterday's close, breaking out of this multi-month pennant formation we'd been forming. And as I explained at the start of this week, we did have quite strong bullish seasonality. That is, at this time of year, the price of Ethereum typically rises over the next couple of weeks, even couple of months. 21 trading days in a calendar month, that's 2 months, 3 months, and it appears to be playing out here. But it's not just seasonality driving the price. Like I said at the start of this week, there are key fundamental drivers, even though the price action didn't appear to have changed much. We've had some key developments and big money coming around to Ethereum on the back of the watershed moment, and that is stablecoins, which run on top of the Ethereum platform, being legitimized through federal regulation. We now just heard the Ethereum Foundation unveiling a bold vision for global ecosystem growth. And what's likely driving the price higher these last few days is a significant supply crunch coming from all over the place. And that is a lot more ETH being purchased than what's been minted each day, with the relatively new Ethereum ETFs being a key driver, attracting over 400 million in net inflows just over the last week, collectively now sitting at almost 150 billion assets under management, with the largest being BlackRock's iShares Ethereum Trust, Ether. And I mean, look at that chart. Yesterday just put in its highest volume day to date ever since it came onto the market last year. Looks like we just got the second highest volume day today. And I mean, you won't find a much more bullish chart than this one right here. Huge signs of accumulation, coiling up, and now we're squeezing up. It's up over 5.5% after hours as we're just looking at the regular trading session candle here. And it's still quite a bit off its highs. And you compare that to Bitcoin, which is also doing really well today. It's actually sitting at brand new all-time highs. Looking at the underlying, $116,000 a coin. But just like I said at the start of this week, there's been a strong rotation of focus and switch to Ethereum. We're just seeing that in futures volume. I think it may be the first time, if not one of just several times, we've seen volume in Ethereum futures eclipse that of Bitcoin. And as I also mentioned, we've been seeing signs of whales accumulating big time. In addition to institutions, Wall Street, BlackRock, the largest asset manager in the world, has actually been buying more Ethereum than Bitcoin of late. Fidelity just put out a super bullish report yesterday outlining the key fundamentals for why Ethereum could be changing the face of finance right in front of us as we speak, also buying into the crypto. And this comes on top of a batch of small companies turning to Ethereum for their treasury strategy, with quite a few actually selling all of their Bitcoin, with my favorite being Bit Digital, ticker symbol BTBT. It's ripping up here after hours as well. And their chairman's actually on the Bitcoin Foundation, and a lot of other well-qualified people in crypto on the board here who've actually been accumulating shares over the last couple of weeks. They sold all their Bitcoin to get into Ethereum. In addition to Bitmine Immersion Technologies, which has been seeing huge volatility, they've adopted an Ethereum treasury strategy, and they've actually got Tom Lee as their chairman. And we just heard a similar move by a company known as GameSquare, which is actually backed by Dallas Cowboys owner Jerry Jones and the Goff family. They've got a $100 million Ethereum treasury plan. And so I know many of you guys are not into crypto. It can be hard to understand and get your head around, but you can kind of think of it like other open source things. Like, for example, a domain, a website, or email, which no one entity controls. And so it's a decentralized, programmable form of currency, which you can liken to digital oil. And so it is very similar to Bitcoin in that it's portable, divisible, durable, scarce, seizure resistant, but unlike Bitcoin, Ethereum can be staked for yield and is much more programmable, with stable coins and companies and governments being able to build their applications on top of it. And I think Tom Lee is bang on the money. He predicts banks will buy ETH to secure their stablecoin, not just for speculation, but for their infrastructure. And that's a key difference with Bitcoin. And I'm glad to see a guy like Tom Lee, who I do respect, and I think he has a great grasp on the market, the fundamentals, the key drivers. And I'm glad to see him gravitate towards Ethereum, unlike Michael Saylor, a guy who I can just never get behind, considering his dirty history. And when you listen to him, he just sounds like a clown from another world. And his obsession with Bitcoin, long term, I'd prefer to put my chips behind this guy, because I think he said it best with this post today. Wall Street converging onto Ethereum as stablecoins are the ChatGPT moment of crypto, referring to late 2022 when GPT hit the scene and caused AI stocks to rip higher, and they pretty much haven't looked back since. I think this is the ChatGPT moment for crypto, and that's what's got me on board with Ethereum, is stablecoins being legitimized and taken off, and that huge potential there to bridge traditional finance into the digital economy. And we saw that with Circle Internet Group coming onto the market like a bull out the gate. They're the company behind USD Coin, USDC. Already got a market cap of almost 50 billion, and it's actually Coinbase, which is one of the largest Ethereum reserve holders, that gets 50% of Circle's USDC revenues. Also on a strong rip here, as I've been noting over the last month, these volumes coming in were signs to me of big money accumulating. And this is the company the US government and big companies are partnering with for their crypto strategies. And unbelievably, just going out to a monthly chart, it still hasn't taken out its IPO highs, $429 a share. I think this may have a lot further to go. And what I think also has a lot further to go is the relative value between Ethereum and Bitcoin, which again has moved up sharply this week, but going out to a monthly chart, it is still down near its lows. And I wouldn't be surprised to see this make a quick catch up as well, because just going to the Bitcoin monthly chart, well and truly at all-time highs here, but Ethereum, it has some room to run. In fact, it could rip up more than 50% from here, and it still wouldn't be at all-time highs. Now, just moving on to another important asset of the future, rare earths. For those of you who don't know, a group of 17 critical minerals used in advanced technologies like electric vehicles, wind turbines, semiconductors, and military defense systems. Despite the name, they're relatively abundant. You could probably find some in your backyard in the soil. They're just difficult to extract and refine economically. But as the world shifts to clean energy and high-tech systems, rare earths have become essential and strategically valuable for global supply chains. And it was actually China that saw that coming and are fortunate enough to be sitting on top of a lot of it. By far and large, the dominant producer, even more so when it comes to refining, for which they're about 80% of the world. And they do have the largest reserves by a wide margin. And so as my regular viewers know, I've been noting ever since the US-China trade war got nasty and they blocked completely the exports of rare earths, I said that's going to give a strong political tailwind for the US to deleverage from China and become more self-sufficient for these critical minerals of the future. And so we got the big headline today, the Pentagon taking a big stake in MP Materials Corp, which is the largest and only rare earth miner in the US. They extract, refine, and separate rare earth materials at their Mountain Pass, California mine, which is actually the second largest rare earth mine in the world, the largest being in China. And so this is very important because they make up key components in a range of military weapon systems. And that's why the US government came out today and said they're going to take roughly a 15% stake in MP Materials, purchasing $400 million of the company's newly created preferred shares. I think that serves multiple purposes. It gives them capital to expand as they're looking to build a new facility at a yet to be announced location, and it also ensures no one else can get in there and take ownership. And so you don't see this too often. The Pentagon making a significant investment in a stock. But if you guys have been subscribed to this channel, Click Capital, you would know that wouldn't come too much as a surprise to us. In fact, this was expected, as we knew the Trump admin wants to get behind American supply chain independence for critical rare earth mineral. And so that caused a huge rip in MP Materials Corp today, up over 50% on massive volume. And it's still only a small mid-cap company. With a $7 billion valuation, just going out to a monthly chart, it too hasn't taken out its 2021 highs. But look at these monster candles coming in here. 2 consecutive momentum thrusts. That's what these up signals are. My momentum thrust indicator letting us know we're seeing strong moves with volume, and they can often precede large trends. And we're seeing similar price action in the rare earth and strategic metals ETF, REMX. Big volume on momentum thrusts, and just going out to a monthly chart. I profiled this one at the start of the year, saying it could be a good strategic allocation as the sector had been beaten down for quite a while, kind of like uranium was a few years ago, which I've been in as well. And that helped to light up the entire metals and mining sector today with the XME ETF up over 5% on volume. And you guys will remember I've profiled a number of rare earth stocks here on the channel before. And since it's still a very nascent industry, like I said, MP Materials the biggest and only operating rare earth mine in the States, there are other smaller speculative names that are still very early stage pre-revenue companies, but I believe they have a strong tailwind, with a few names being Critical Metals Corp, TMC, the metals company, Hyperion X, and the one I've been invested in for a few months, Idaho Strategic Resources, which actually claim to have the largest deposit of rare earths that they can access in the States. And they're traditionally a gold and silver miner, which already have stable revenues and income. And with that huge upside potential of rare earths, that's why I invested in it, shared it with my Stock Picks members, and intend to stay invested in this for as long as I can. Because like my stock fair value indicator suggests, it is still quite undervalued. And again, I think the fundamental key drivers here are as good as you'll see anywhere. A huge political tailwind. I mean, we just saw the Pentagon invest almost $500 million into a closely related stock. There's not much more of a bigger structural tailwind than that. And if you want to see my full Stock Picks portfolio, that's a real money account I've dedicated to this service, then click the link below this video and join my Stock Picks service today. And you can see all details of what other small high growth stocks I'm invested in, as I send a deep dive report on one new stock every Sunday morning that I'm about to invest in the next day. And just like Idaho Strategic Resources, I've got a number of other key picks that I think have huge potential, not only now, but going into next year as well. Moving on to what else is moving out there today. Airline stocks soaring higher after they got absolutely whacked in Q1, Q2. Saw Delta kick off Q2 earnings season today with some pretty good results, topping Wall Street expectations, restoring its full year guidance. That's a pretty good indicator on the consumer, as a lot of travel is discretionary. And so to see them catch a bid like this is a good sign. Delta up 12% today, helping all the other major players as well. United up 14% and American up 12% on the back of potential short covering, as like I said, they got absolutely slammed earlier this year. And just look at some of the volumes we've got coming into the market. The Jets ETF up 7% today on big volume. And it's not just this sector either. We've seen it in a few sectors of late. Home construction. Look at this activity here. These fat green candle. Big accumulation underneath the 200-day moving average. Utilities shaping up as well, pushing up against year-long resistance. And they're both a defensive and offensive trade, helping to power the AI revolution. And healthcare, which has been the worst performing sector year to date, may potentially be getting signs of bottoming and accumulation here as well. Just moving on to rates. We got Fed Governor Christopher Waller reiterating his support for a rate cut later this month. Controversial stuff, since the man at the top, Too Late Powell, is no doubt pushing back against that. And we've even got Trueflation, the best indicator of the real-time growth of actual prices in the economy, as they scan thousands of websites every day to give us a good look at how inflation's tracking. Now almost 3 full points below where the Fed's at. That could be a record. And Trueflation even coming out and posting a meme on this. But that's not to say we couldn't see an uptick in Q3 CPI data from tariffs, even though it may just be like a wave that passes through. As the economy kind of digests it and adjust to it, I think we'll know before the September Fed meeting, which I think is going to be the showdown. And I mean, even if we did get a bump up in consumer prices, that's not going to help many consumers who are already struggling. And what does Jay Powell think? He's going to jack rates on top of that? I don't think so, because it's actually the lower third of household incomes that are struggling here. The top half are still doing fine and are now the bulk of consumer spending. But the lower third, their total credit and debit card spending in the 3 months to June has actually gone negative year over year. However, like I said, the vast majority of spending is done by the top half, with the top 10% actually accounting for over 50% of consumer spending. And we've seen a nice bounce back in June looking at total card spending data here. After we did have a bit of a pullback on the back of the tariff scares, consumers putting their wallet away as they've been overwhelmed with negative headlines. However, we've just seen a significant bearish to bullish flip in this data, and there still may be a bit more uncoiling and pent-up demand to go throughout the summer months, which may be why the market's already pricing that in with a real good recovery in the retail sector and consumer discretionary stocks as well, drifting higher, potentially shaping up to break out again. Because if J. Powell does the right thing and brings rates more close to inflation where they should be, just as the bond market is suggesting, that will help ease the pressure on those lower income consumers and just add further tailwind to the market and the wealthy that drive the bulk of spending now, which could be why the S&P 500 looks like this. No longer cares about tariffs, no longer cares about the Middle East. I think it's excited about the big beautiful bill passing and the prospect of lower rates in addition to the AI trade just being on an absolute tear. And it may be the US and J. Powell that actually has to catch up to the rest of the world in global easing. And we do have global liquidity on the rise, which again is no surprise to see Bitcoin breaking out. And it's not even global liquidity that I think is driving the bulk of the gains for Ethereum here today. It's all those fundamental key drivers and that watershed moment of stablecoins going legit and Wall Street and big institutions not only investing in ETH, but planning to integrate it into their systems. And this could very well become the currency of the digital economy. As always, it's just my opinion. I'm interested to hear yours. You're welcome to drop a comment below this video. Otherwise, enjoy the rest of your day, and I'll see you back here again tomorrow for the daily market review to wrap up the week's trading. Cheers.